really like the news on AMD.
What advice do you have for the numerous tackle traders who did not adjust their covered call, and now their covered call
on AMD?
4 strikes deep on AMD? Because I guarantee that's
got to make a choice.
25 people.
And they're probably freaking out a little bit, not understanding that they're making more money on the stock movement than they're losing on the short call movement. You got to make a decision, and the decision has to be one. You either say, okay, I'm okay with getting called out at, say $25, because that would have been a very popular.
That would have been a very, very popular
strike price to write out. So you either got to say, okay, I bought it at 23, I sold at 25. I'm going to make my $2 on the directional movement, and I'm going to keep my cash flow, which would have been about $1.50 in that range. You make $3.50 on a $22, $23 investment. Anybody in the right mind would take that home in a month. Okay, so that's number one. You make the decision to allow it to get called out. Number two, if you want to ride the momentum, you buy back the call option at a loss, and you ride the momentum of AMD until that momentum slows, and then you ride another call option. But what risk are you taking there? The risk you're taking there is the snapback coming back down into support, right? That's the risk you're taking there. Or number three, you can buy back the option, rent out a deeper, say $30 call option, and you can roll that option, that next movement into the next month. For me, I would not just buy back. If your investment in AMD is an investment and you're using AMD as a cash flow vehicle, I would not allow it to get called out for me. I would either, one, allow the growth to happen if I wanted to use my short-term trading ability, or two, and I think the best answer, Mark, is to roll it up and out. I think that's the best answer, is to move that.
People might have a tough time with that, though, because they might be so deep in the money call.
Yeah, we did that this morning in the Traders Lounge. We actually walked through rolling up a call and rolling it up and out and showing, you do take a drawdown. It was a debit to close it out and take credit. But at the end of the day, your capital gain on the stock, assuming you believe it can keep rising, is going to more than offset that. So, but it's hard. Psychologically, people have a hard time ripping the Band-Aid off that short call.
Yeah, but no, I mean, we were talking about prospect theory just yesterday.
Yeah.
Right. And no, just take 2 minutes to describe to our team what prospect theory is, because I think this is important in not only making a decision on directional trades, but when you're making a decision on whether to buy back that call option at a loss. So talk about prospect theory just a second.
Right. Prospect theory is it's a psychological theory. It's a behavioral economics piece from like 1979. They won the Nobel Prize in economics for it. And it comes down to, we'll call $0 break even your frame of reference. And you can look at they graph out the amount of pleasure or psychological value people get from winning. And the graph looks a little something like this compared to the amount of psychological value they feel for the same amount of money they're losing. And the graph looks a little bit like that. So if, you make $100, you feel it this much. If you make $200, you feel it this much. If you lose $100, you feel it, this much. If you lose $200, you feel it this much. Like you feel a huge, there's a heavier psychological value to a drawdown to losing than there is to winning. And this kind of speaks to how we're wired in our brains. What happens when people start to get drawn down is they become risk seekers. They become a little bit of a gamblers. They have a harder time ripping off the Band-Aid. And then, the return value, they become impatient with their profits because they're not going fast enough. They just don't feel the gain as much. And I think it's probably the hard wiring in most people's brains that they have to rewire that, find a mental hack to get around it. And I think the simple answer to that's always like, using a stop loss. But we are not psychologically wired well when we start to experience loss aversion. So closing out like a covered call when you're down, even though you're winning on the stock, we have such a hard time taking the loss on the call that we might prohibit the potential gains by rolling it up.
But think about that, Noah. Even though you're making money on the net trade, on the net investment, because you always make more money on the growth of the stock than you lose on the short call, people still have a hard time buying back that call at a loss because I can't do it. It's at a loss. But you're making money. You're making the right decision. But I want to say this about prospect theory. Prospect theory, and thank you so much for just kind of walking through the basics of prospect theory. But when you're looking at a loss versus a return, our psychological mentality changes. And it might be the exact same dollar figure. You're making $100 versus you're losing $100. But when we're making $100, we're fairly quick to lock in that profit. But when we're losing $100, we're not quick to lock in that risk because we don't want to take a loss. And so when we're losing money, what prospect theory states is that we're going to go down to our bare bone basic instincts. And when you don't have a lot of experience in the market, you look at that short call on the covered call and you're like, oh, I can't buy that back because I'm going to buy it back at a debit and I'm going to take a loss. Well, what's the right decision to make? And based on the momentum of AMD, for me, if I don't want to be called out, which again, if you're concerned about it, get called out, rebuy, reset up. There's nothing wrong with that. But in terms of this decision, for me, I still think the best decision is to roll up to 30 or somewhere around that ballpark, depending on what delta you want to use. Roll up to 30, reset that call option. If it goes to 30, so what? You're still making more money on the stock than you are on the short call.
Yeah, well, and the thing about that is even if you roll the call up and the price does retrace, you can always roll it back down and profit on that call.
Mm-hmm.
So if you're holding the stock, particularly for the gains, and you want to do your cash flow around that, you do need to allow for the capital gains. And so the idea of rolling up, I think, makes a lot of sense because again, otherwise you just get called out and you don't benefit from the rise in price.
Absolutely. Okay, let's move on. Nice little example there on AMD. Thanks, Mark, for that question. That allowed us to kind of work through the mindset of what we're kind of looking at. And I hope that little conversation that Noah and I had on prospect theory and locking in the loss, making sure that we're all making the decisions based on the analysis really kind of helps you guys out as you're trying to make decisions on your individual positions as well.